Crypto prices are back in the red. Welcome to the Daily Forkast June 17th, 2022. I'm Megha Chaddah of Forkast, covering all things blockchain. The crypto market's positive reaction to the Fed hike proved short-lived, and Three Arrows Capital's continuing woes are only adding to the pressure. We've got the latest on that, plus Huobi's decision to exit Thailand and a clampdown on NFTs from China coming up. Let's get you up to speed from Asia to the world.
Join thousands of NFT traders who already start their day on CryptoSlam.
Let's kick off with an update on Three Arrows Capital. Zach Prince of crypto lender BlockFi says it has fully liquidated a large client that failed to meet its obligations. While Prince didn't explicitly name that client, his tweet followed a Financial Times report claiming BlockFi was among those that had liquidated at least some of the Singapore-founded hedge fund's positions. Prince said no client funds had been affected and claimed that BlockFi was one of the first to take action with the counterparty. According to a report from Block Crypto, Three Arrows Capital is facing insolvency with liquidation totaling at least $400 million. Meanwhile, the crypto market has returned to the red. Bitcoin was trading within reach of the $20,000 mark for the first time since December 2020, early Friday in Asia. Forkast Danny Park has more on the market action.
The crypto market initially responded positively to the Fed's 75 basis point interest rate hike, but profits from that brief rally had been erased by Friday morning. Manuel Yeager of Singapore-based digital securities exchange ADDX told Forkast that the Fed's handling of inflation and the potential for recession aren't the only concerns for the market. He says the war in Ukraine and COVID concerns are also hurting investor confidence, but there are more specific issues affecting the crypto space.
I think the biggest concern that there's going to be a contagion risk. That means that what's happening now to Celsius and Three Arrows Capital might spread to other key players in the market, or potentially worse to the overall financial system. So I think that's the worst case scenario.
Yeager also believes the Fed printing massive amounts of money hasn't helped.
That money had to be channeled somewhere, and a lot of that has been channeled into the crypto markets, which also has led to a lot of speculators entering crypto space and hoping to make big gains. And now we have an uncertain environment.
However, while the road ahead may be rocky, there may be some light at the end of the tunnel.
Over the last 10 years, crypto has seen many crashes, but this time it's the first time where there's a wider spread potential financial crisis. So I don't believe that the markets will rebound as strongly, reaching new highs as we have seen before. So I assume that we might see lower prices, more stable prices, if you will, over the next months.
Yeager says while there has been some bad behavior in the space, we are seeing positive signs towards regulation and that a recession might actually help the industry come back stronger. For Forkast, I'm Danny Park.
Over in Thailand, Hong Kong-listed Huobi Technology Holdings is to permanently close its Thai crypto exchange unit on July 1st. The decision comes after the country's Securities and Exchange Commission revoked its license. The exchange's license was confiscated back in May due to its failure to organize personnel and systems in line with the regulations in Thailand. It's whiplash for the crypto industry in the country after crypto payments were banned, but crypto tax requirements were eased back in March. Heading to Hong Kong now, where the de facto Central Bank of Hong Kong has announced a project researching cybersecurity issues around retail central bank digital currencies, or CBDCs. The Hong Kong Monetary Authority, or HKMA, is set to work on Project Stellar in conjunction with the Bank of Israel. Together, they will investigate data security implications for CBDC architecture, as well as finding ways of making it more resilient to cyber attacks. Andrew Abir, the deputy governor of the Bank of Israel, said the intention of a possible Israeli CBDC is to provide an efficient system and increase competition in the payment market. Back in April, the HKMA invited the industry and public to submit views on policy and design issues for introducing a CBDC in Hong Kong. You can find more on crypto regulations and the development of CBDCs at forecast.news. Meanwhile, NFTs may soon be censored in China. This after an official of the country's National Press and Publication Administration told state-owned media that NFTs are considered as digital publications that need to be censored before distribution. The director of the Bureau's Blockchain Copyright Center said digital collectibles including original art, music, animation, games, plus film and television which must be reviewed before they can be sold. However, China has not yet issued a specific regulatory policy for NFTs. And speaking of NFTs, despite the current market turmoil, there's no denying the fact that the NFT market is growing. That's led to insurtech companies spotting an opportunity. Forecast's Jenny Otis takes a look at why there's a need for NFT insurance.
A recent report by the blockchain data company Chainalysis said that the number of NFT buyers and sellers is continuing to grow. It added that NFT transaction activity is stabilizing this year after seeing explosive growth in 2021. Because of this development, a number of insurtech companies are now offering protection to the asset class. But is having NFT insurance important? Yehuda Petcher, NFT relations strategist of Crypto Slam, says yes.
NFTs, because they make digital items scarce, they make them tangible, they make them sometimes valuable. Insuring a valuable NFT like you would a physical possession, it makes a lot of sense. And especially after all the theft we've seen in the past year in NFTs, it's needed.
Petcher, however, raised a very important point. Can insurance cover the loss of the image associated with an NFT like the actual art?
While the record of an NFT it can never be destroyed, it's preserved on the blockchain, 40% of the images of NFTs are stored on private servers. Only 10% of those are actually stored on chain. So if and when those servers are shut down, the image associated with those NFTs will be gone. And this is a really hard lesson that unfortunately a lot of people are going to learn over the next few years.
Andy An, CEO of insurtech firm Yas Microinsurance, explains to Forecast what can be insured at the moment.
We are not insuring the file of the NFT, but we're insuring the smart contract. So anything that is on the chain, we are offering our insurance, and also we are looking into the real transaction, what we call asset transfer risk. So from a project owner transferring the asset to a user, in between there will be risk where maybe there are bugs or following hackable risk of the smart contract itself. That's number one. And number two would be holding asset value risk, which means that it is in your digital wallet and it disappeared, being hacked.
Petcher added that aside from having your NFT insured, backing up your NFT image to IPFS decentralized storage will be essential for NFTs to grow and reach the next level of mass adoption. As for Anne, expect more improvements to cover digital assets, not just NFTs, in terms of insurance coverage.
It's a future of the insurance where we see a lot of new digital assets where there will be coming along, and both the conventional and unconventional businesses. Our ultimate goal is to have autonomous insurance, which means that in the future, in a more transactional basis, where let's say you do e-commerce or you're doing a payment, whether it's a fiat or crypto, insurance will be included secured by blockchain.
For Forecast, I'm Jenny Ortiz.
And finally, here's a sneak preview of the latest edition of Word on the Block, where we go beyond the headlines. This week, Forecast Editor-in-Chief Angie Lau speaks to Win Yap Fu, founder and CEO of Singapore-based gaming venture Atlas, which is looking to onboard the next billion users in crypto via games.
most of the games are standalone games. Their economy is contained. When you earn something in game, it's not liquid, right? It's not cash, right? It's just tokens, like virtual things. And DeFi or crypto, when it meets games, it suddenly unlocks this capability, right? The second thing is interoperability, and this is something that I'm particularly passionate about. So as a gamer, like let's say you invest 4 years of your life in a game, let's call it Clash of Clans, right? And you get really good at it. And one day you decide, hey, look, I kind of like to play, Candy Crush these days, right? What happens to everything in there? You lose everything, right? You start from scratch. And that's because assets are not interoperable, right? And this is one of the biggest pet peeve of any gamers out there. Just go, what if levels, experience, items, rare things that I own in one game
can be transferred?
Exactly, right? And that is why I think that the future of gaming is actually really bright, and that the concept of blockchain meets games meets finance, when you mash that together, it could be the start of a new digital economy.
The full episode airs Monday, so do make sure you check it out. And that's your daily forecast from Asia to the world. Follow us on Twitter for the latest updates at forecast_news. Head to our website as well for more detail on all of today's stories and a whole lot more. Until next time, I'm Forecast Megha Chaddah.